In this video, we're going to be looking at the balance sheet, one of the major accounting documents, and how you can use it to handle your personal finances. So a balance sheet is really looking for you to answer two questions, right? The questions are, first, what are your assets? These are the things that are positive and create value for you. And the other side is the liabilities. These are things that are negative and they take value from you. Assets can be considered things like cash or real estate or investments. And on the other side, liabilities can be things like student loans or credit card debt, money that you owe. So we're going to look at here what we can do to create a balance sheet. The first thing that I need to do to create a balance sheet is I need to have my assets section. Right, so I'm just going to make a quick assets section right here. Make it nice and big. Okay. So like I said, there are different types of assets. The first kind of asset that we want to focus on are cash and bank accounts. Why are these assets important? Well, cash can kind of be turned into anything, which is great because a savings account, for example, or even better, a checking account that can be accessed on a regular basis is money that you can take and turn into pretty much anything. The great thing about cash is that you can use it to buy anything really in the United States economy, from a vacation with your significant other to car repairs to maybe babysitting for your kids to a ShamWow. Cash is king in our economy. It is exchangeable, like we talked about in week one, for pretty much anything. And as such, that's a huge asset. So what we want to look at is, let's say, stuff like cash on hand. That's any cash you may have that you might not have in a bank account. It can also include a checking account and a savings account. Why do I include these three here? Because these are what we call liquid assets, meaning that I can use these on really a moment's notice. So I can say from one day to the next, hey, you know what, I have money that I need to pay, I have a debt that I need to have extinguished for one reason or another. I had an emergency and my car broke down. Any of these problems can be solved from one day to the next. So that's why we need liquid money, which means that it could be used pretty much right away. So I would put all of that right here. So let's say hypothetically, I'm going to convert this cell, for those that are using Excel like I am, I'm going to convert this cell to be money so that it reads it even better. So let's say that I have $50 in my wallet, I have $1,000 in my checking account that I got paid recently, and let's say I have $5,000 in my savings account because I've been doing a good job of saving. Okay, great. Now I'm not going to get too in-depth into the other ones, but let's just throw a couple of quick assets. Let's say that I have some investment assets, right? So let's say, you know, I have retirement at work. That's a 401k. I have a Roth IRA. IRA stands for Investment Retirement Account, for those that don't know. Let's say that I just started, so I've only saved $1,000 in here. And let's say that I also have some stocks that I've been buying here or there. This is a general statement. You don't want to be too specific. So I'm going to go ahead and just write $500. All right, so that's it for my assets. Now what I'm going to do is I'm going to create a little line here that says total assets. And then I'm going to add them all up. Thanks to Excel, I can just use a formula. That is the sum formula. Alright, that does it for my total assets. So what I'm going to do here then is I'm just going to sort it out. I'm going to keep sorting it so it looks pretty and it's easier to navigate later on. It's very important to have easy to navigate information because that allows us to know what we're looking at later on. So here I'm going to have a sum section for each one. So total cash. Do a quick sum formula for that number. For those that don't know, it's equals sum, and then just click through the range that I'm looking for. and then another one down here for my investment money. Then I have one total number for all of my total amount. So that means that according to this, I have total assets of $7,550. Not bad. You know, we're just starting out, so that's not too bad. Now we have to look at the second side, because of course having assets is wonderful, but most people have both positive and negative things to worry about financially. The negative side is called liability. So we're doing the same treatment we did up here. The first kind of liability that we look at is any sort of big debt. So let's say that we have a student loan debt. All right, I'm going to go ahead and write a loan debt here because it is a pretty big one. So merge it out, make it nice and pretty. All right, so the first debt, one that most of you watching the video will have, will student loan debt. Right? Let's say that I have $30,000 in student debt. Now, why is this important to have on your balance sheet? Well, because this money needs to be paid back. You do have to, at some point or another, pay this money back, and therefore you want to make sure that you have track of it at all times, because managing the money that you owe versus the money that you have on hand and the amount of investment funds that you have certainly does help you to understand where you stand financially and what you can do to maybe make your circumstances a little bit better. So let's say we owe student loans $30,000. Let's say we have a car loan and we have $5,000 left to pay on that, and we also have to add credit card debt. And let's say we've been pretty good about that, so we only owe $500. All right, just like up here, we're going to write total debt, and we're going to use a sum formula to add them all together. That gives us the number that we're looking for. In this case, it's a lot of money. It's $35,500, but you know, that education does not come cheaply. Now notice how this balance sheet, is very limited. We have just a few types of assets, just a few types of debts. Great thing about a balance sheet is you can add and subtract categories for your needs. If you own real estate, you can add individual categories. You could also split them up depending on the kind of assets or liabilities that you have. It's really up to you, but we're going to keep it simple for here just to illustrate the point. Now what we want to do is we want to have the big formula at the end, and that is for an individual net worth. The net worth of your net worth, or the net worth of your finances basically means that you have, if you were to use all of your assets, all of your positive income, if you were to sell it all off or use it all right away, turn it all into cash, and then pay off all of your debts instantly, this is the amount of money that you would have left over. So like we mentioned earlier, the formula for that is assets minus liabilities. And in this case, our net worth is negative. Now this is not something to be scared of if you are currently a student, because with time this will change. And in fact, the balance sheet can help address that. Notice how I have all of this here in one column. If you so choose, you can have multiple columns. You could, let's say this would be my balance sheet for right now, but you could keep this going and maybe do it by year, by month, by week if you really wanted to. It's up to you, but you could say have 2013, 2012. You won't even have to add all this part. It's already included. You just need to have the numbers that fit in there. It will give you a nice running idea of how your net worth is changed, and if it's going up, meaning in the positive direction, then you're doing a pretty solid job. If it's going down, then maybe that's a problem you have to address. That is the personal balance sheet. If you have any questions, please feel free to email me. Catch you next time with the income statement.